Good morning. Today is Friday, April 28th, and the time right now in Kuala Lumpur is 8:47 in the morning. Now let's look back at what the Wall Street has done overnight. We have the release of the first quarter GDP for the United States. The market was expecting a growth of maybe 2% on an annualized basis. Now remember last year in the third quarter, US GDP was at 3.2%, and the fourth quarter of 2022 was 2.6%. So we can see it's coming down. But even at 2%, in which the market was expecting for the Q1 GDP for this year, it is still a declining trend. But what came out last night was a lot worse than the market expectation. It came in only at 1.1%. So we can see from 3.2, 2.6, 1.1, there's a very sharp decline in US economic activity. And on top of that, we have the release of the the personal consumption expenditures, which is the favorite inflation indicating gauge for the Federal Reserve. It came in a lot worse than expected. So how does the market react? Guess what? Now the market market participant took the equity market so much higher last night. Last night we have a massive run up in equity prices. And why is it so? On the back of such a disastrous economic numbers coming in last night. Now the market now expects the Federal Reserve, which is going to meet next week on May the 2nd to the 3rd, in which they're going to decide and deliberate whether to hike interest rate, and if they do, by how much. Before last night's economic release on the GDP numbers and the PCE, which is the personal consumption expenditure numbers, market was expecting a quarter point increase in the interest rates, or basically 25 basis points. Now, after last night's such a disastrous number, market participants suddenly have a 180-degree turn in sentiments, thinking the Federal Reserve has already broken the banking system, in which only last month we saw the one after another. We can see banks were in trouble, and so now on top of this, we can see very obviously the US economy is just contracting very fast. Okay, over the last 3 quarters, now they say, okay, now the Federal Reserve has broken the system, and maybe they may not even hike rates when they meet next week, and some are even contemplating the idea that they may even pivot, meaning say they will cut interest rates. So that took the market so much higher on the belief that the Federal Reserve will not raise interest rate and may even cut interest rates. So obviously they think that a lower interest rate is good for equity markets, and that has been true in a bull market. So this is exactly what we saw. But when the economy is shrinking and you cut interest rates, that when everything's all said and done, this is a reflection that the Federal Reserve is recognizing the economy is weak, and that may not necessarily be a positive sign. But for right now, the market is believing that that is a good thing for equity markets, so they are going to take this a lot higher now. Now the high traded so far this year is at 13,000, no, not 13,204, which is traded about a fortnight ago, and you can see now the price is again challenging this level, and it won't take too much, okay, for the market to close beyond 13,204 and to challenge the last August high of 13,720, which is this red horizontal line that you can see here. And if this level cannot cap this move here, market have the tendency, or even have the likelihood, of going beyond 14,000 for the first time since August of last year. And the target, if that's going to be the case, is 14,135 to 14,710. So this is a big shift in sentiment after the release of the GDP numbers that we saw last night. So is it a sensible thing to do? No. But for the time being, market sentiment seems to be wanting to go up. So maybe that is going to happen. The momentum that we saw, very strong momentum that we saw last night, is likely to take the equity prices a lot higher. And it's very likely that we may actually end this week, tonight's trading at a much higher levels. So this is all I can share with you today. So do watch out, because when the Federal Reserve finally cut interest rate, it is a recognition that the economy is in real trouble, and that is a negative, not a positive. Okay, this is all I have for you today, and then I'll see you again next Monday. Bye-bye.